to get to know me?
Yeah.
Because I've always found creative and interesting ways to make money.
Today I wanted to talk about something called the institutional imperative, or the institutional performance derby. What I'm referring to is forces that exist on institutional investors, which are a big part of the investing world today, that cause them to do things that both hurt their performance and create opportunities for other investors. And then the add-on thing that I'm going to talk about as well is when their restrictions can hurt us. So, what is the institutional imperative? It is institutional investors have very kind of constrained ways of operating, both because of prevalent market beliefs, but also because of their size and their governance, and they end up doing things. Their focus is become shorter term rather than longer term. They can't own certain securities based on biases, price, whatever. Anyway, that creates all kinds of opportunities for the value investor. And so, when somebody's indiscriminately selling a security for a reason other than an erosion in value, that could potentially create an opportunity for the unconstrained investor to buy a security and enjoy its price recovery, buying it at a big discount to its business value. More recently, I've discovered that this kind of institutional imperative can have a negative impact on our investing as well. So, for instance, last week we talked about a company that was taken over at a big premium to its recent trading price, but at a significant discount to what most investors' cost base was, but more importantly, at a significant discount to what I and other portfolio managers thought its ultimate value could be, simply because the institutional investors who controlled the stock grew tired of holding it. They're under a variety of different pressures, and they wanted out of the space and therefore wanted to accept a transaction that left a lot of money on the table for the eventual buyer. Another transaction where an institutional investor wanted a company in which they were the largest shareholder to invest in a certain area, and the company did that, and due to difficulties in commodity pricing and whatnot, it has yet to be a success. But now that institutional investor wants to leave the space and leave behind the opportunity where an asset which is trading for pennies on the dollar, it potentially being sold for some premium to its recent trading price, but still at a significant discount to what it might trade for at a different time in the cycle for that commodity. The institutional imperative, both a helper and more recently a hindrance to value investing.